back to the channel, Crypto Trend Trader, with a quick update on Bitcoin. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. I was just having a little lunch and decided I'd do a quick video. Looks like exactly what we said is playing out. We came up, tagged the fib, selling off. We've got our two red histograms. It's almost noon right now. We got about 12 minutes till this candle closes, and we're about to close under the short time frame moving average. We already have two red histograms, and we have the distribution zone. And when this prints right here, we're about to get the cross and hard sell signal. So typically what will happen is we'll get a opposite direction reaction rally. So we'll get a push up real quick to try to save the moving average, try to save the indicators and the cross, which obviously will most likely fail in this case. But a lot of times what will happen is people take a short right here at 93.81, and then all they got to do is push it back up here on a wick. You know what I mean? You might get a wick back up to like 9,500 or something like that. You can liquidate a bunch of high leverage people on that, and then all of a sudden you get the actual move down the direction. So that's why I typically don't just like take a trade off of a random spot like this. I'll wait for a better entry. So if I'm on a 4-hour time frame and I'm looking to enter the market, I don't just wait for the 4-hour candle to print and then enter, because right now the 4-hour everything looks bearish. It looks like it's about to sell off and we're about to start a trend to the downside or continue a longer term trend to the downside. But you might switch over to the 1-hour and it might be telling you the exact opposite thing. The 1-hour might be absolutely exhausted from all of this selling off already. So the 1-hour is saying buy, and then we get that reaction rally back up, put in another lower high, or it sells back off, and then we get the actual move down. And that's where a lot of traders get roughed up or whatever. They use too tight of a stop loss, or trade like don't look for a good entry for the time frame they're looking at. Because think about how many people, investors, traders, experienced guys, traditional markets, crypto, whatever, they wait for like a weekly candle close, and then as soon as that weekly closes and confirms or whatever, they'll take their position immediately off that. And you always will see that happen. I mean, when you get like a substantial time frame candle close, you're going to see a bunch of people just immediately take a position. So you usually see like a move in the direction that the indicators or oscillators or price action is confirming, and then you typically see a reverse move opposite to what you've just been told. So if it's telling you, hey, look, buy, we're going into a monthly trend, that's great. And then all of a sudden everybody just buys in. So you see a little push up real quick, and then you see a big dump, and all those people get liquidated. All the people that came to the party late and just entered off like a horrible position and didn't actually like take the time and the effort to enter in a good place, or use too tight of a stop loss, all those people, or too much leverage, whatever the case is, all those people get wrecked right out of the trade. And that's why people don't like trading this, because you can be right about the direction, but if you use too tight of a stop loss, you don't use proper position size, you don't use risk management, you don't wait for confirmations, you don't have a good entry, you can literally turn a coin flip into this crazy, difficult, hard situation and lose all your money. And really all you had to do was just buy crypto or buy Tesla or whatever it is and not have a stop loss. You know what I mean? So in many ways you have to be careful, because people always say, oh, I keep my stops tight. Well, that's a great way to just get like cleaned out all the time and taken out of positions before the move ever happens. And some people say, oh, I don't use stop losses, and it's like, well, that's a great way to lose 95% of your money if you bought into some of these like altcoins or whatever, and you never got taken out of a trade. So neither one of them is necessarily a good idea. They both need to be used like in responsible situations. And the same way time frames need to be used. Like if you want to trade like a weekly time frame, you're going to get signals very, very rare, and you might get a massive move like before that signal ever plays out in the opposite direction. So that's why it's important, if you're looking to, okay, monthly confirmation, entering a long-term uptrend, so now I'm going to switch down to a shorter time frame like the weekly, and I'm going to look for a good entry into that position. I'm not just going to buy as soon as that candle prints. So, and part of the reason I'm talking about that too is we're getting ready to close a bunch of long-term time frames. We're getting ready to close, our weekly and our monthly, and it's this important time. And typically, like, you see reversal, like stop and reverse points are like, typically at the end of a time frame. Like, it's, you basically like end a week, end a month, end a year, whatever, or a quarter, whatever the situation is, and then you say, okay, sell, you know what I mean, or buy, or it's essentially like confirmation in one direction or the other. So that's why you often see like these big moves in the direction of a trend, then a counter trending move in the opposite direction, and then like the actual move plays out. So you have to be very careful in these situations, and what you're doing for stop losses and where your entries are. And that's what I was saying about when you go to take an entry point off of something like this, like, when you're constantly putting in a new high here, every time you put in a new high, you're going to try to like call that the high, and you're just going to get taken out the whole trend on the way up here. It would have been just easier to just get on the way of the trend and go with it. So that's why we use like the short-term moving averages to just keep you in, basically like the correct trend. Because you would have left right here. This is your short-term. That's where you get out of the trade. And then it crosses back over right here, and you can get into the trade. And you'll see that how many people are trading those moving averages and the exact ones that I'm using, because that's where you get that massive candle at, because that's that confirmation candle. Confirm we're selling off, okay? So you don't want to enter just at the bottom of that candle as soon as we get the cross, because then what happens? The counter trend move back up, the retest, and then the actual move plays out. And the same thing here. You didn't want to just straight buy into this as soon as we get the confirmed cross right here, because then what happens? We sell back down and retest the moving average, find support, and then boom, we get the actual move in the direction. So that's the exact situation that I was basically describing, but on a shorter time frame. And that's what we would essentially expect to happen when this candle closes at noon today below the short-term moving average. That's confirmation to the market we've lost this moving average as support. So typically what will happen is we'll come down and test the next support zone, which would be our 21, the yellow in this case, at 92.60 or whatever. So what I would expect to happen is that's the next place we're going to test, but we don't have to test that right away. Like if we close right here, we've already tested our short-term moving average. So we might test up a little bit and then sell back off, and then you end up with that wick sticking up and then like a red candle. But that's kind of what we already have right here. So at this point in time, it might be more likely that we're coming down here for the test, and we've already attempted to save the moving average as support. So that's what I would expect to happen next. And you'll notice when we get that next candle prints here in a minute, it's going to line up perfectly with the green SAR on the 4-hour. So we'll come down here and try to find support on the 21 and the SAR, which typically we will, and then we'll probably get that move straight back up here to retest the breakdown, at which point in time we can see, is this going to hold or not. And you'll notice too that basically this is all of our like moving averages starting to cross back up in the correct direction. This is the SAR, coming up here, starting to get like a decent trend and everything. But this is also right at the resistance and everything. So this is what FOMO is all about. You get just enough momentum and you get up just high enough that people feel like it's going to keep going and they're going to miss out. And then boom, that's the absolute top. And how many people do you see doing technical analysis, drawing like zones all over the place and stuff? Like I might draw a bubble here and there or whatever, but if you look at where price action reverses and where like these important areas are at, like you see this wick exactly at the 382. Like do you see, like, I mean, where this came exactly up here, where did it stop at? It stopped exactly where we said. Now I'm not saying this has to be the absolute top, but I mean, that we literally called it like to the dollar. I think I said 96.30, and that's exactly where it came up to. And I mean, I'm not making this stuff up. It's the 618 and the 786. But see, the problem is you can draw a fib a million different places. You have to learn the foundation correctly and where to draw these and where to be fibbing from and how the algorithms work and when to know to switch to the different one. Anybody can just draw these on here and be right some of the time, but human nature is you're right, so you bet a little more, you're right, so you bet a little more, you're right, so you bet a little more, and then all of a sudden you're wrong and you lost everything, or way more than you ever won, and you think, dang, how did that ever happen? Well, you get greedy, and that's all it is. You know what I mean? You have to use proper position size and risk management. So and I guess I'll just stay on here for like another 3 minutes and we'll wait and see how this plays out. But and this is another one too, this diagonal trend line that's been on my chart. People don't even know what this is. They don't even know why they have that. You know what I mean? They have just random diagonals drawn places, and the price action doesn't interact with it. How did I have this drawn the entire time and we broke above it right here? I didn't move it. I didn't redraw it so that everything stayed inside of my pattern. Like, that's not how you do technical analysis. Like, no, sometimes you're going to break above a resistance point. You don't then move the resistance to where it broke out so it looks like you know what you're doing. No, because then you would have missed out on this. Because look at this diagonal red line that comes through here. If you would have moved it, you know, after it broke here and moved it up or whatever, you would have never got that exact test where it came down here. Look at this. One time exactly the wick comes to it, two times exactly the wick comes to it. I mean, that's not coincidence. And these lines have been on here. This line has been on here since, man, I want to say like the 14th or something like that. At worst case scenario, the 18th. You know, so it's just important that you start to recognize like the difference between who knows what they're doing and who is literally just like going on TradingView or Twitter or whatever and like copying someone else's stuff and trying to tell you like they know what they're talking about. And it's going to look like it too sometimes, but it's very important that you learn to identify that, because the most important thing, especially when you're first learning in technical analysis, and is building a strong foundation. And you could say that about anything you're learning. You need to have a solid foundation. If you build your whole trading strategy and your whole knowledge of technical analysis and your trading portfolio and all this stuff based on some dude who has no idea what they're talking about but sounds like they do because they've just been in the space for a while and sound clever, you're going to end up in a world of hurt, because most of these people are making money off of like making all their money off of like their viewers or sponsorships or whatever. Same with like stock market investors and stuff like that are getting on here telling you like what their trades are and stuff. They're not making trades, man. And they come on and be like, oh yeah, I bought, you know, $10,000 in Tesla today. Like, I'm just showing people like what's up. Well, yeah, but they're buying it with your money. Like they're instead of them taking the chance on an investment and it being a bad investment and having to like be smart about it, they can just recklessly invest because they're taking money from you essentially. And that's what it comes down to. So, and I have no problem with that. You get what you pay for though. Make sure that you're paying for something good. You know what I mean? Because that's the problem is I think too many people pay for crap and then end up with crap and can't figure out where it went wrong. You know what I mean? So, but yeah, that's it. We got our 12 o'clock close, and just like we said, we got our third red histogram here. We printed the hard sell signal. So at this point in time, looks very likely that the 786 of the orange and 618 of the purple is going to be the reversal point for this. Basically, you know, keep in mind too, I heard everybody saying this is a bullish pattern because it's bearish, it's going down, but you break out, and when you break out, it's bullish. But that's like what happens when you read like 3 lines of something off the internet and then regurgitate it to someone else. Because what this really is, this is a bearish continuation pattern. Like you're going down, you bounce back up and put in another lower high, and then you keep going down. But the move from it is bullish. It's a counter trend bullish move, a bullish breakout of a bearish trend, but it's still bearish because you're putting in lower highs. So it's important that you understand that stuff. And a lot of people, you know, just remember that all it takes to sound like you know what you're talking about a topic, all you have to do is just know a little bit more than the person you're explaining it to. Because how many times have you met someone who like literally read an article on Facebook and then regurgitated it to you, and you're like, man, that sounded like really smart, and then you ask them like 1 or 2 questions, and then it becomes extremely evident that they have absolutely no idea what they're talking about. They're just basically like reading headlines. So, oh, and speaking of headlines too, I've been just experimenting around with the headlines of my videos. I was pretty sure, obviously, that you know, the same people just watch my videos non-stop over and over again. It's not like new people. I'm not finding new people. I mean, I gained like some subscribers and stuff, but like, for instance, no random person in all of the world is going to click on a video that's called "Boring Man Feeds Bread to Fish and Ducks Show Up and Also Eat Bread." Like, I literally just thought of the most ridiculous, boring title I could think of and just put it up there with nothing else changed, just to see how that video would look in response. And the same way I've been doing with like my like crazy title like, oh man with time machine predicts markets. I'm just trying to see if those actually affect anything, because I really feel like the titles don't affect anything. I think most people are looking for whatever and just like go to the same ones, and then every once in a while I think YouTube like suggests you, they have all this stuff in analytics and everything like that, but I think it's total BS. Like a lot of that stuff just looks like total BS. I'm just experimenting with it to see to see where it goes. So but there we have it, guys. That's our TA for today, and we'll see how it all plays out. There were some questions about like some of the indicators and maybe some of the things not showing up on them. I'm not sure. You may have an older version of it. You may have a different version. Some of them have a similar name, so you may like think you're looking at the same indicator and you're not. I'm really not sure without looking at it specifically, but I haven't really been updating them since I was having all those issues with TradingView. So yeah, so there you have it. For today, Crypto Trend Trader. Oh, I did want to talk about this too, real quick, before we get out of here. The bottom of our channel that our wicks, speaking of like our channels and wicks and everything, a lot of people remember move this white channel down here so it fit everything, but that's our parabolic trend line. That's different than the channel. Okay, so that's why we never moved ours, and that's why we got these perfect touches right here, and that perfect touch right here, and that perfect touch right here, resistance. And then when we broke out and we came up, we were talking about this. Remember, we said we are going to break above it, but we're not going to be able to hold it. Well, that's what happened. We broke above it, consolidated, sold off, and now we're below it. Now we're retesting. So this was our we basically broke down to it, couldn't find support and broke down under it. This was the retest, broke above it, try to find support, and we can't find support. Maybe we do, I don't know, but assuming we don't, then what's going to happen? It's the exact same thing. We break down to it, bounce, sell through it, retest. You know what I mean? So when we come back down here, we're retesting it right now. We try to push back up. If we can't push back up and continue on the uptrend right here, we're going to sell back off. And then this is now a resistance. And then we'll come down here and we'll test our parabolic trend line. Which, now we don't have to actually put in like a lower low to get down to it. So by the time we get over here, you know what I mean? We could get down and then we could hit the parabolic trend line, which lines up perfectly at the 382. And then all of a sudden we start putting in like a little bit of a reversal pattern, maybe bounce back up to the top. So there you have it, guys. Pay attention. This price action is actually been very predictable lately and is continuing to be so. Remember, we talked about the bottom all the way down here to the absolute tippity top. Way back over here, and what did we say happens if we confirm this top? We're going to come down to the 236, and what happened? We came down literally exactly to the 236 and touched the bottom of that channel. So now look, we came in here and we put in a series of lower highs, and we're continuing to put in a series of lower highs. So if we do not break above here soon, what's going to happen is we're going to get another capitulation dump, and it's not going to be to the 236. We're going to come down to the next green fib level, and the next green fib level is down here at 6,986. So if we cannot break up here soon, we're not going to just stop at the 236. I mean, we might get a reaction we will get a reaction off of it again, but what happens is you test a fib level, you try to go above it, you can't do it, you come down, you test the next fib level, you bounce back up. If you can't find strength and you can't continue moving back up, you're going to come down and test the next fib level at the 0.5. And you keep doing that, and then it's going to come down here by the time plays out. And we come back down here, it's going to line up with these diagonals, and we'll go ahead and extend them out. And then you'll start seeing how those diagonals over time interact with price action, and why it's so important to get stuff out of the way when it's not relevant, but also pay attention to when it may be relevant again in the future. And there you have it, guys. A little bit of our technical analysis for the afternoon close here. Looks like so far we're doing exactly what I said. We're going to try to get the push back up here and see if we can, turn this trend around. Basically got the push back up right at the close. That's essentially, depending on what moving average you're using right here. I mean, again, I never see anybody use an 8. I've never seen anybody like regularly using an 8. I use it because of Fibonacci. Obviously, I use Fibonacci, and that's like my main trading strategy. But that's why I use the 8, as it's a fib number. And you'll see exactly where the 4-hour close is at. I mean, it's at the 8 100% at it. So what I would expect to happen, we get a nice little wick up here, and then we come back down here, and we're going to test this parabolic SAR in this 21. So I'll see you at 92.60 sometime today. And we'll see how all this goes with the stock market and everything going, because as you may have noticed, the Dow did exactly what we said too. We came up here, busted just above that 618, just above it. But now look, that was the heart line in green right here, and that was our decision point where we said, okay, if we close above this, we're going to test back up here, all the way back up to the 886 and the top of the channel. If we get rejected, we're going to sell back off, and we're going to come back down and test the bottom of the channel. So guess what? If this doesn't hold right here, I mean, probability tells me I'll see you at 23,126. And then this is going to start looking a lot more bearish, as it looks like essentially we just got the Fibonacci 618 retrace and then sell back off. And you have to be extremely careful with what chart you're looking at right now too, because these index funds are essentially trash. I mean, they're loaded up with so much junk right now. Like the probability of most of these companies like staying, let me just put it this way. I don't think, this is not financial advice. I'm not your financial advisor. Markets are extremely volatile, so please do your own research and trade responsibly. But the last thing I would want to do is just be in a basket index fund right now. Like, if you honestly think that diversifying in like the top like 500 companies or something like that is better than you legitimately just picking 5 or 10 companies, like you're honestly just being lazy. Because I do not believe for 1 second that the majority of the companies in these index funds are going to succeed. I think probably a great deal of them will go away. Maybe I shouldn't say majority, but quite a few of them are going to go away. So when you're looking at an index fund, a lot of the ones in that index fund are going to go away. So why not just long the strongest and dump the weakest? Like, why do you want to, you know what I mean? I don't know. It blows my mind. Like, people don't like buying into strength. But there's a reason that things that are going up continue to go up. It's because smart investors buy into strength. You buy into the trend, expecting the trend to continue until it doesn't. So things like Tesla will have like pullbacks and stuff like that. But do you think Tesla is going to be a better company, a bigger company, a stronger company, have more market share in more different markets like solar industries and electric cars and, batteries? And there's just so many different things going on, space program. Like, do you honestly think that there's many companies that are going to do better than Tesla does? I really don't over the long term. I mean, there might be some like emerging market companies and stuff like that, stuff we haven't even heard of yet. If somebody comes up with a specific drug that's relevant, but I don't think you're going to see consistent gains from too many things, in relation to that. So why would you want to buy into like a basket fund where you have like essentially like Tesla and Ford and General Motors and, Chrysler and all these other, just random things that are just like a crapshoot? Like, you have to, I mean, in my opinion, you have to believe that some of these airlines are going to go away and get swallowed up by some of the other ones. I mean, most of these companies were barely profitable, if profitable at all, not even just airlines. So the likelihood that they're just all going to survive is very unlikely. So you're going to end up with, basically more losers than winners in these basket funds. So that's the last thing you want to do. Like, and I mean, I'm not saying you should go out and long Tesla by any means right now. I'm just saying that, if you do just a little bit of research, you can do a little bit better than something like a basket, index fund. Those are meant for long-term trending markets, retirement funds, just long-term consistent gains. Those are not meant for people that want to invest or use technical analysis or anything like that. Those are for just, regular people to just diversify their portfolio with like a big group of, top performers essentially. And that's all that is. But in a time like now, the last thing you want to do is just be betting on everything. When the markets are strong, it's okay to throw a little extra money in some random crapshoot type stuff and just, hope it pays off. But when markets are weak and, there's uncertainty, that is the most important time to be intelligent with your investments and your capital and your trades. And I think we're going to leave it with that for today. Yeah, I think we're going to leave it with that for today. Let's see how this all plays out. I don't think I actually showed off this chart, but this is a really good example of parabolic trend lines. This is the daily for SPY, but you'll see essentially like the parabola has been weakening. We started with the blue, the green, the yellow, the orange. We basically break down from one, find support, break down from one, find support, break down from one. And then we started putting in this top essentially right here. We were able to push back above it, came back down for the retest. So if we can hold right here, continue to the upside. But if this breaks back in, we're going to at least come back down to the 618 and the bottom of the pattern right here at 292. But, again, I mean, what's the difference really? You just, the 618 is where the Dow was at. So SPY got like just a little bit higher, and that makes sense. I mean, it really does. And I bet if you look at a couple of the top performers, like Tesla or whatever, you're going to see, and same with cryptos. If you look at like some of the newer cryptos, or like, the better performers, I should say, you're going to see the same thing. They're going to get more of a bullish retracement, but they're still putting in a lower high. And that's the most important thing. Like, careful with these statistics that everybody's throwing around about the strongest month in economic history based on the stock market. We're still lower than when we started. So we had an epic run in the stock market, an epic run back up to a lower high. Remember that, an epic run back up to a lower high, because people forget about the dump. They forget about the dump. And this is something too I've shown off a lot of times. I want to show people this specifically so you can see how statistics are completely misleading. Okay, look, from top to bottom, we went down 35.32%. Okay, so now I'm going to measure the exact same movement from the bottom back to the same top. So that's 35.32%. Okay, and this may seem stupid to you, and you're going to be like, you're a dumbass. Yeah, obviously. 57.67%. So it went down 30-something%. In order to get back to the same price, it has to go up 57%. So it has to go up another 20% more than it went down just to get back to break even. So when people say, well, yeah, we had a 40% dump in the stock market, but we had a 40% rally, so we're back to even. No, it doesn't work like that. If you have a 40% dump and then you have a 40% pump, you're still lower. And that's it. And that's why it's always better to long something than short it, because it can only go down 100%, but it can go up indefinitely. So, and that's where we're going to leave it for today. Crypto Trend Trader, and I'm out of here.